Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing Magna's stock by analyzing their financial statements and dissecting their financial ratios so we can determine if it's a buy or a sell. Let's get started with the model. This is a large cap company, 11 billion market cap. They're trading at $39 a share and they have 285 million shares outstanding. Magna designs, engineers, and manufactures components, assemblies, systems, subsystems, and modules for OEMs of vehicles and light trucks. It operates four segments: body exteriors and structures. That's the first segment. The second is power and vision. The third is seating systems. And the fourth is complete vehicles. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. Really high free cash flow in 2021, 1.5 billion. It got cut 73% into 2022. 400 million. It did come up 45% in 2023 to 600 million, down a little in the trailing 12 months. Net income is the profit or loss on the income statement. It's revenue minus expenses. That also drops a lot from 21 to 22. Then it doubles into 2023, 1.3 billion, down a little in the trailing 12 months. Razor thin margins, they only convert 3% of their revenue into net income. Revenue is the sales for the company, and that does go up each year. Not a lot, but it does go up from 36 billion to 43 billion. They pay a nice dividend, nearly 5%, which cost them $544 million. So they can only cover the dividend 1.1 times with their free cash flow. They could cover it twice with their net income. We estimated 4 years of future free cash flows. We also estimated the terminal value, which is all cash flows past year 4, that's 26 billion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $22 billion. We divide that by 285 million shares. And we get a calculated stock price of 79. They're trading at 39, so they're trading at a 51% discount. It's a really strong buy according to the model. The company does project their free cash flow to grow a lot in the future. The projection for 2025 is 1.5 billion, a lot more than 2023, but it's actually less than 2021. So if they did it once in the past, they could do it again in the future. And a moderate growth the next couple of years. If they can hit these targets, which I think are doable, the stock is poised to double. There are 48 companies in the same industry as Magna, and if they have a number in red, they're worse than the median. If they have a number in blue, they're better. They spend a lot on CapEx. That's why their free cash flow is kind of low. 2.6 billion. Debt to equity ratio between the median and average. They pay the highest dividend. They generate nearly 600 million of free cash flow, a lot more than Mobileye, a lot less than Aptiv. They rank third in market cap at 11.1 billion. They're trading at 1 times book value, which means their market cap equals their equity. A really good PE, trading at 10 times earnings. Price to free cash flow a bit high. They're trading at 19 times free cash flow. And look at their price of sales, one of the better ones on the list. They generate a lot of revenue relative to their market cap. And they're not growing much anymore. Their 5-year annual revenue growth rate is only 1%. They just released their second quarter earnings, and their revenue is almost identical when you compare 2Q 23 to 24. Their big expenses, COGS, cost of goods sold. These are all the expenses directly tied to generating the revenue. That includes payroll, the cost of materials. So they do have positive operating income, a little worse than last year. For the trailing 6 months, it was 460 million, which is a lot worse than last year. But when you compare just the second quarter, it's pretty similar. Net income is also similar to last year. EPS of $1.09. They did add 1 million shares. Last year, 286.2 million. Now it's 287.3 million. When a company adds stock, that means it receives cash, but it dilutes the shareholders. So to summarize, I rank them 5 out of 10, but would I buy it? I give that 3 out of 10. I probably wouldn't buy this stock. I rank their ratio 6 out of 10. They have a really good PE. Price to free cash flow is a little high. Price to sales is really good. Financials 5 out of 10. Revenue is going up, only up 19% since 2021. Free cash flow has come down a lot since 2021, down 61%. But it is up since 2022, and it's positive, so that's good. So let me know what you think. Give the video a like, subscribe, or comment below. If you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.